Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook. Today's date is Wednesday, December 13th, 2023. I will be your host for Options Guide TV for about the next 25 minutes or so. And today, as promised, we're going to start building out our paper trade portfolio. We added some positions on Monday. We're going to try to do this all inside the Tradier Trade Hawk paper trading platform. So that's a mouthful there, but we're going to try to continue this strategy throughout 2024. We talked a lot. If you go back and look at the archives in Options Guide TV in September and October, we were bearish through the markets. We decided to get a little bullish. In November, at the beginning of November, we started buying some deep in the money call options. On Monday's show, we actually had Caterpillar get away from us. So we actually closed out that entire position. And what I'm gonna try to do going forward is adjust these positions, not necessarily during the show. So if I get a situation where an option contract is getting in the money on my short call options, I'm going to have to adjust them, but I'm going to keep adjusting throughout the show. Usually with short option contracts on deep in the money options, the strategy that we're highlighting here is called the fig leaf inside the Options Playbook. We don't want to be selling calls around known events like earnings, something that might drive the stock price a lot higher or a lot lower. You obviously have unknown events that can do that, but if it's a known event, we're going to be ignoring those months, and we're going to be selling calls around the entire position whenever we feel that it's appropriate. We feel like the markets are in the right conditions. With those call options, we're going to continue to roll them. And the only time that we're going to take off the positions is, first of all, if it does go against us, we're going to take it off. If it ever comes down to our strike price in our long call option, that's a hard stop. Or we also have a stop that's going to be in at a certain price level of the option contract. Because one of the biggest things about options is that they're decaying assets. And because of that, if the strategy is not working out after a certain time period, time decay becomes such a big issue. We're battling against it, though, by selling call options. And then, obviously, our opinion on the underlying stock can change. The market conditions, everything else can change. So far, the positions that we only have one position, and actually, it's came climbing back. Google's up today. It's at 132.69. So our one position right now that we currently have on that is actually down, and let's run to the Trade Hawk software here real quick. Like, I didn't mean to go on a little bit of a tangent, but that position is actually down about 6%. Everything else is up. We've sold a lot of call options against the position. I am going to keep my own records of everything that we are buying and selling. We're going to eventually roll. This is a $200,000 portfolio. We'll probably put about $100,000 in the market, and we're going to manage those positions with about 5 to 7 positions. We'll be alternating a lot of in and out of different stocks, but I don't ever want to try to manage more than that, especially on the deep in the money call options, because it's going to take some time to try to manage this portfolio. And once again, it's done on paper. It's supposed to be a learning experience. I've never really had an opportunity to just grab a portfolio and try to manage it. But with Options Guide TV, we're doing it every other day, Monday, Wednesday, and Friday. So we can actually look at the adjustments and address those positions on an almost daily basis. So because of that, we're going to build out this portfolio. It's going to be a lot of fun. Along the way, we're also in 2024, we're going to be doing the speculative trades. Those trades have panned out very well recently. We got bullish in November, and obviously you know where the market's at. So it's more so the timing of the trades and looking at some advanced strategies that we can do on a short-term speculative basis. And, we always have fun around earnings too. So throw that into the mix. And we got a lot of content going into 2024 in the new year. So today I decided I was searching around for a retailer never really been. I haven't had my fingers on one that I really liked. I've been long Home Depot for a long time. As a matter of fact, way back on options on my podcast, Options Playbook Radio, I talked about Home Depot a lot. I still can't forget going during the pandemic when everybody was, and this was actually one of the only times where this was a factor in my strategy and my outlook for the markets was the first weekend that basically work from home started, and everybody thought it was going to be a couple of week process and ended up being an entire year. I went to a Home Depot parking lot and I couldn't park. There literally was not enough spaces in the parking lot to park my truck. So I took that as a sign because I've never seen that on Black Friday or whatever, especially Home Depot parking lots are usually huge. And I just that was a trigger point for me. And Home Depot has done well, and now it's sold off and it's back down a bit. It's a little bit more pricey. Some people will say that maybe Lowe's is the one that we want to do, but Home Depot has really good options volume, and I think I'm gonna add that to the portfolio, and then we're gonna throw in a pharmaceutical, Eli Lilly, solid stock, solid dividend. And the one thing about adding Eli Lilly and a higher dividend paying stock is it's harder to sell options against higher dividend paying stocks, well, especially around the dividend, because the dividend actually gets taken out of the price of the call. But once again, I like to try to look at learning opportunities and trying to describe to people, well, what happens when stocks pay big dividends? How does that affect the prices of the options? The bigger the dividend, what's going to happen is the call price goes down and the put price goes up. Why? Well, the dividend is going to get paid, and what's going to happen to the stock price? The stock price is going to go down, which would hurt the calls, and when it goes down, it's going to help the puts. So if it's a known dividend, that gets priced into the models. So you pay less for those call options if that dividend is going to be paid before that expiration date. And you pay more for the put options because there's a known event that's going to lower the price of the stock. That's simple. So with it's solid dividend paying stock. We're going to look at Home Depot. We're going to add those two portfolios. We got rid of Caterpillar. That stock actually did really well. I think we were up over 30% on that deep in the money call option, and sold a lot of calls against it that expired, but it got away from us. It got 5 points deeper in the money. And because of that big move to the upside, it wasn't worth rolling the calls anymore. And on top of it, I was okay with getting out with Caterpillar where it was at. So there's a little bit of both that was working in that scenario. So we closed out that position at a decent gain. And that was actually the first stock that we added to the paper trade portfolio. Straightforward. Okay. So now let's go on in, and we're seeing the options grid here. So we always do. Now in the paper trading portfolio, we don't have index quotes. So you're not going to see the SPX, the VIX, that type of thing, but we're going to just do this live. So I'm going to type in the symbol for Lilly, which is LLY. And actually, let me bring up over here in the money options, and we're going to add Lilly to that watch list. And we want to go out. So far in our portfolio, I kind of like to stay, especially on the deep into money options, at that same range. We're going out to January of 2025. Like I said, this is going to be a 1-year experiment that we're going to do. And at some point in time, we'll get out of these options. NVIDIA will be one that we'll probably trade out of well before that expiration date, only because of the volatility that's in it. There will be a point in time. 500 is a magic number in NVIDIA. It's really hard for it to break through on that. So we'll be watching that one real close. Options grid. So that's January 2025. That's the only information that I need. And there it is. 401 days out. Some nice round number there. Almost 400 days. 590. We want to go down and look at a strike price that has a delta around 80. And I noticed that my bid and ask got moved. My delta should be over here. So we're going to go down. We got an 80 delta right here. We got a 4 point. See, this is where we get into trouble a little bit. When we get a little bit deeper in the money on these more expensive option contracts, we got to deal with the bid-ask spread, but we're still going to work this trade a little bit. So this market is 156 by 149, and this is 149 by 142. So we'll on the paper trading portfolio, it's a little bit harder to judge where you might be able to get filled at. This one has 1,000 open interest and it's 133. I think we're gonna sacrifice and go down to this strike because I see the open interest. So we're gonna buy this. We're gonna get a little bit lower delta. I'd like to be somewhere around 79 to 80. If you read inside the options playbook on the fig leaf, you'll see that. But I like this volume and I like this market, and especially in a paper trading portfolio where we really don't have live markets per se. I'm going to put that in and see where the paper trading software will fill me at. So we're looking to buy the 520 strike call option. We're going to do this at a limit price. We're not going to sell a call against it just yet. 132, 130 by 1. Let's go 133. We'll work that a little bit because I'm going to put in a Home Depot trade. Try to get the trades filled in this paper trading app prior to the show ending. But let me give you a read back here. We're looking to buy Eli Lilly's symbol LLY 2025 January 17th expiration, 520 strike call. Delta is around 76 on that. We're going to pay a little bit more on the midpoint. As a matter of fact, let's make it 3010. See if it will fill. And we're going to send that to the floor day order limit. And I just noticed that my quotes stopped moving, so give it a second to catch up. There it goes. Okay, send that order, and the answer is yes. Boom. Now, once we do that, slide this up, and that gets sent to the floor. Over in the event side, we will see if we get filled. That's where the alerts will come up, and that's where we'll see those trades. And then also we'll see our orders inside our order tab. Moving a little slow on this. All right, let's move on. Let's pull up our other quotes on Home Depot. Home Depot is also a little bit more expensive stock, $332. We want to stay in that same expiration. So you want to make sure that it's highlighted. Here's the January 17th, 401 days away. Go over here and we look at it. We make sure this is January 17th, 401 days away. Market's at, and Home Depot is 332. We're at 330 here. We're going to go down and look for 80 delta. So we're right in between. Let's see where the market is at. We got 7,000 on the 82, and I like that market better. And that's the 300 strike. It's nice. That's a nice round number for a strike price. We got decent open interest on it. We got an okay market. So let's go and place that order. We're going to be buying one of these. We're at 55.45 at the midpoint. Let's try, that's not bad, 55.75. Let's do that. All right, we're looking to, and we'll hit send and get the order confirmation. We're selling one, or we're sending an order to buy one long HD January 17th, 2025 expiration, 300 strike call at a limit price of 55.75, and we click yes, and we send that to the market. All right, that one went down to the floor. And I want to highlight here, we also are showing that we have an order in. It's not filled yet, but we haven't, and you can see that above, all right? And when you see this, it's showing that we did actually send that order to the floor. And I think that other Lilly order got lost, unfortunately. I don't know where that went to. LLY. Same expiration date, 1,000. Let's do it again. Let's send it. If we end up with two of them, that's okay, because we're going to eventually add to some of these portfolios. We got to get that $100,000 into the market before year end is what my goal will be, before the hopefully Santa Claus rally that we get between Christmas and New Year's. So here we are. We're buying the 520 strike call, January 17th, 2025 expiration. 139. We'll put it in at 140, 134, 134, 50. All right. And let's send that one to the floor. And I'll hit send and just send it off. Okay. So now that one went to the floor. All right, so we're working both of those orders. It looks like you can see both of them. And if you have any questions about the paper trading portfolio that we're going to be putting together and we're going to be watching throughout the year, please feel free to put them in the chat box. Happy to address them. Options Guide TV is all about interactive. That's why we like to use this platform, because you do get that ability to ask any questions. If you want to cover anything that we've talked about recently, the most recent trades that we've done on the speculation side of things have been in the SPX. We did a long call spread in a skip strike butterfly. Both of them did well. Not everything is meant to, not everything's meant to be nothing's meant to be a recommendation, but we'll address the good with the bad. We're going to have bad trades that aren't going to work out. And a lot of times on those trades, when we're looking at adjustments, we actually learn more about those trades than we do about the ones that actually always work out on a daily basis. So if you have any questions, put them in that chat box and I'll try to address them. And let's go back and look at these orders. We're not filling on that order yet, so I want to make sure it fills. And let me try to address that. Okay, so if you click on the order, the TradeHawk software, this is just like the live trading platform, by the way, which is a huge benefit. So it's the software is saying we're not close enough to that price. We got a wider bid-ask spread now, so something got lifted and taken away. So let's put this at 135 and limit place for the day. See if we can get filled at that price. All right, and then let's go to the Home Depot trade and see where that market is at. 155.70. I assume we'd get filled on that one, but I'll adjust it. Let's go to 85. Let's give them another dime. All right. And so we're changing that limit price from 75 to 85, and we'll replace that. Send that to the floor. All right. And we'll let those orders work. And once we get the fill, a lot of times when I'm looking at a covered call on a stock that I own, or I'm doing a covered call on a deep in the money option, there are times, if I'm a little bit nervous in the marketplace, that I would want to, and let's go out here for just a little bit, just like this. All right. So there are times where I'll sell the call option against it. I might even do it all as one trade. Sometimes there's a benefit. It helps you work the order, helps you get filled on that trade. But if you think about it, most people that are doing covered calls, when you buy a stock or you buy in the money option contract, you're doing it because you think the market's going to go up. You can take the approach with all these strategies that I don't care. The strategy is all about selling that call option and bringing in premium above and beyond any dividends. And that's one way that you can approach it. But sometimes I like to put the position on, let it work a little bit, and then sell the call option against it. There's no problem with doing it. But the one thing that the one way to approach it is to try to be consistent in how you are entering your trades and when you are trading calls against those positions. And today we got a big deal, right? We have the Fed meeting. So I really want to let that Fed meeting play out before I go out and sell a call on these positions. I want to see where that market is at. Now, I don't think it's necessarily going to affect Eli Lilly and Home Depot, but the markets in general, right? Usually the conference call starts at 2:00. And a lot of times right now it's pretty much baked in that there is not going to be an increase or decrease, but a lot of people are going to be looking for when will the potential cut come. And at this point in time, well, I guess there's a little bit of speculation that they may raise interest rates one more time. But most of the pundits at this point in time, including the CME Fed Watch tool, is saying that there could be a cutting of rates in March, as soon as March. So we'll let that ride today. We'll let this play out, and we'll come back on Friday and probably sell some calls against these positions. But we've added 2 more to our paper trading portfolio, and we'll be a little bit more speculative next week. On Monday, we'll probably go in and look at another speculative trade. But we need to get our portfolio in place, and my goal is to try to have this all set up before the end of the year. All right. No questions that I see. So with that said, that's going to be it for this edition of Options Guy TV. Please click subscribe, ring the bell, pound that thumbs up. It helps us out a lot here. And we'll see you this coming up Friday at 11 a.m. Eastern time for the next edition of Options Guy TV. Thanks for coming, everyone.